Hello and welcome everyone to this very timely webinar. My name is Jerrid Anderson and my partner Dylan Simon and I run a 9-person brokerage team, and we specialize in the purchase and sale of apartment buildings and development land in the greater Seattle area. We've gathered everyone today to discuss the impacts of local and state legislation on our clients who are housing providers and housing developers. Before I kick things off, I do want to acknowledge the uncertainty of the time we're living in, and I do truly wish everyone well during this uncertain crisis. With that said, we will touch on how COVID-19 is directly impacting current legislation, apartment management, and apartment development. But the focus of the webinar is on legislation, not the global economy, not lending in the lending markets, not virology. So while these are very important and interesting topics, we're going to keep it focused on legislation. I say this simply to keep us focused, and I would appreciate everyone's help as attendees when you're asking questions so that we can keep it there on the legislation aspects. So with that said, I'd like to briefly share the cadence of our time today, which is 1 hour, and then we'll get started. So first, I'll introduce each of our panelists. They'll give a summary of their thoughts on the current state of the market, state of affairs, as it relates to the local and state legislation. And then after that, we will move to Roger Valdez, who's one of the panelists, and he'll give a brief presentation on the most recent legislation updates. And just so you know, he's putting in his final edits this morning. So this is very up to date with the latest and greatest. And then lastly, we'll shift to the panelists. I'll have some prepared questions I'll ask, as well as I'll be reviewing questions submitted by the audience, which you can do in your side panel, and asking those as well for probably the last 30 to 40 minutes. So without further ado, Ian Morrison with McCullough Hill Leary is an attorney, and his practice focuses on land use entitlements for multifamily residential, office, and commercial projects with an emphasis on working in the Puget Sound jurisdictions. He works with developers, property owners, investors to identify and execute strategies that provide predictable, cost-effective pathways to secure entitlements for development projects. So I know we've all heard of the game, 2 truths and a lie. What I'm going to have Ian do is say 2 things that he's concerned about regarding current legislation before COVID-19, and 1 thing he was optimistic about, and then 2 things he's concerned about after COVID-19, and 1 thing he's optimistic about. So with that, I'll let Ian take it away.
Well, thank you, Jerrid, and good afternoon all. I hope everyone is staying safe. Yeah, as Jerrid mentioned, I'm a land use attorney at McCullough Hill, and also in my spare time in the Government Affairs Chair for NAIOP, which is the Commercial Real Estate Association. And so just 2 weeks ago, to the 2 truths, you know, it was just 2 weeks ago that the legislative session ended, and right around the time that COVID was emerging as the preeminent threat that it is now. And if you would have asked me for a grade of the legislative session down in Olympia 2 weeks ago, before COVID emerged, I would give a marginal B, because I think the 2 positives, but were also some major concerns, and Roger will talk about them and how this COVID situation is evolving, was this session was the first session where rent control and the threat of rent control really emerged in earnest. And the good news out of the session was that effort, which is an effort that we're seeing from tenants' rights organizations all over the state and many of the elected officials, Roger's going to talk a little bit more about that, failed for the short 60-day session, which was a positive thing, but also I think one of the major threats to the real estate industry. We knew that was going to be a short-term battle in a long-term war. And I think that the COVID situation and the conversation that you're seeing about tenants' rights and mortgage and tenant relief right now is only going to fuel that fire going forward. So I think the biggest concern out of last legislative session pre-COVID was rent control. The other associated tenant rights issues that were major suggestions or concerns was the tenant legislation for following the Seattle just cause eviction going statewide was a major concern. I think Roger will speak more about that. And then the one positive thing coming out of last session is 2 years ago, as you guys are, excuse me, it feels like 2 years ago, but things are moving so fast. Last legislative session, the state legislature significantly changed the real estate excise tax to hit our industry with the graduated REIT. I think that one of the things that we saw where there was a concerted effort to push back on that, unfortunately, in last year's 2019 budget was not successful, is there was the start of some buyer's remorse where individuals in the legislature started to realize, given the volume of sales in the fourth quarter of 2019 and then the drop off that was already starting to happen in 2020, that maybe they had gone too far on the real estate excise tax. And there was some conversations about possibly pulling back for housing projects or affordable housing projects in the REIT reform. That didn't prevail, but it started the conversation. And I think that REIT reform and the multifamily property tax, which was extended at the state level for 2 years to address that dropping off cliff of projects that were rolling out of the 12-year extension. Those were the two things that I was cautiously optimistic may build towards a momentum and some consensus going forward. I think those things are going to be still very top of line because as we see COVID and the conversations that are happening at the political levels, all of these things are going to be top of mind going into next legislative session and maybe even a special session with the legislature. So I think that is both the positive is that there was a conversation and some buyer's remorse, but it's also negative that we know that the elected officials are going to take this COVID response to bring all of these ideas back to the forefront in the terms of tenant recovery.
Thank you very much, Ian. Moving on to Mike Bessenyey with Bonavista Management. Mike has managed real estate in the Seattle and surrounding markets for the past 17 years. His company is focused on mid-sized properties in King and Pierce counties. Bonavista, the management company Mike runs, is a full-service property management firm that tailors planning and operations to each project, working to maximize NOI while maintaining their assets. So, Mike, I'll turn the same question to you. 2 things you were concerned about and 1 thing you're optimistic about pre-COVID-19, and then 2 things you're concerned about and 1 thing you're optimistic about since COVID-19.
Thanks, Jerrid. Hi, everyone. I'm presenting my perspective from the operating level, the front lines of this and the tangible effects at the property level and excuse me, to our residents. We have approximately 2,300 apartments with about 3,000 residents in our current portfolio, and that represents an average of county and city demographics and income levels. So we've got a pretty good beat on what's going on. Prior to COVID, we were dealing with the first-in-time legislation, additional measures related to background checks and efforts to limit our ability to set and maintain, strict rental criteria, which helps and is really our only tool in mitigating the risk associated with non-performing tenants and nuisance tenants getting into the building. Most anybody who's experienced or tried to evict a tenant knows that in Seattle and surrounding areas, it's quite difficult, and preventing them from getting in is being limited with those legislative pieces, and it's just not a help to our operations and our clients' performance. The second concern prior to the COVID pandemic was the cold weather eviction ban, and the perceived effects that would significantly increase delinquency, terms of delinquency amounts, and inevitable loss from non-paying tenants. In addition to nuisance tenants and et cetera that we wouldn't be able to deal with for periods of time. The current eviction moratorium is giving us a glimpse at what some of those effects may be. We have data coming in that I admit is likely skewed due to the significant job loss and such going on now. But the data points that I have are delinquency from the beginning to the end of each month. We average in our portfolio about 4% across the board of delinquency for the first half of the month. When notices expire, this is under standard operations, when notice expire around the 15th, we see that number of 4% diminish to about 1% or less across the portfolio by the time we get to the end of the month, the last week or so. Under the current moratorium, our ability to collect, and any recourse has been removed. So we've seen that number not diminish in any significant form. We started out the month at about our average at about 4%, and we're somewhere around 3.5% right now. And the feedback coming from tenants is limited. They've just gone silent, and our ability to do anything with that is gone, or at least delayed. The second piece of it is the effect that we're expecting in the next couple weeks when rent comes due in April. We've had some limited surveys reaching out to tenants, but the majority of the information has been tenants reaching out to us, contacting, saying they have been laid off from their jobs, funded or delayed. They're not going to be able to pay rent or full rent coming in April. And that number is at about 3% of our total residents in the I-5 corridor in King and Pierce counties. Obviously, those are concerns. We don't have any idea where this goes, if or when it will end, other than the current state, but that can be changed at any time. So I am optimistic. I'm optimistic that the majority of tenants, the majority of folks are good people and work through these things, but and then more so that folks like Roger, advocacy industry groups, law firms, etc., are working to counter and balance out the efforts coming out of our council and legislative bodies, because at the property level we need those folks to do it, and they're out there fighting the fight for us.
Great, thank you very much, Mike. I'll now turn to Roger Valdez with Seattle for Growth. So over the past 2 decades, Roger has worked at the state, regional, and local levels on issues ranging from public education to public health. Most recently, he was housing director at a local nonprofit managing and developing affordable housing. So he's prepared a great presentation for this meeting, and I'll let him take it away.
Okay, can everybody see my, am I okay with this? Hopefully you can see the first slide here. Thanks, Jerrid, for that intro. Ian and Mike, great information. I'm gonna go through this pretty rapidly, but when I began this, preparing for this was several weeks ago, and I was gonna be talking about some of the trends that we were seeing across the country and locally in that affect the housing provider resident relationship, and all of the different policies that were being proposed and the way that they were currently affecting operations and the way that they could possibly affect operations in the future. I think everything that I was going to talk about is still true, but the COVID-19 response is going to accelerate that. It's basically adding fuel to the fire, as Ian talked about. I start here with a quote from a housing provider that I got during this whole mess that's unfolding, and he said, "Without our residents and commercial tenants, we would be unable to operate." And that really typifies, I think, the attitude of every housing provider that I know dealing with this. Is these are your customers, and these are the people that you rely on, just like a restaurant relies on its folks that come and eat there, or a grocery store to buy food. And so I want to start out with a little bit of a note for people to start thinking about, which is we need to start talking about ourselves as housing providers, not landlords. The use of the term landlord and tenant is fed this narrative that we're in the middle of right now with rent control and all the other measures. And it's a small thing, but talking about housing providers and residents, I think can start to shift that narrative. It's a little bit harder to get our arms around. So thanks for all the work you're doing and for hanging in there during this difficult period of time. I know it's uncertain, and we're going to do what we can to advocate for you. We are a 501c4 nonprofit, and our goal is to advocate for more housing of all kinds in all neighborhoods for all levels of income. If there was one phrase that I would attribute to us, it's we don't need more affordable housing. We need more housing so that it's affordable. We're a supply side organization, and in that spirit, we have started to form something called the the Center for Housing Economics, which is a policy center or a think tank that is intended to focus on pushing back on a lot of the bad data we hear about rental housing, offer better science-based and data-based solutions, and then try to do things to change the narrative, like talking about ourselves as housing providers rather than landlords and tenants. Both of these efforts are currently underway, and we're trying to get this Center for Housing Economics stood up in the midst of all of this, and we'll talk about that a little bit later. So running through at the federal level, the federal government has issued a 60-day moratorium on foreclosures for single-family mortgages backed by Fannie Mae, Freddie Mac, or the Federal Housing Agency. The same is true for multifamily projects. In exchange for not evicting anybody, you can get forbearance on loans to those projects. So how that gets operationalized and implemented is still unclear, but that relief is at least there for those loans. At the state level, the governor issued a 30-day moratorium back on the 18th, which affected the 20-day notice, and essentially does not allow any moving forward of evictions at this point for non-payment of rent. You still can evict people for nuisances or crime or threatening people's safety. It's unclear how that would unfold, but there's also a 30-day waiver for various taxes and late fees and interest that are charged by DOR. You might, if you're interested in that, you should check out their website. I have not seen how they're going to implement that, but there is a waiver available. Under the stay-at-home order that the governor issued, commercial and residential construction is not authorized under the proclamation because construction is not considered to be an essential activity. Oddly enough, nonprofit housing is considered essential, but your multifamily projects are not. Road crews and pothole repair and those sorts of things are considered essential, but not market rate multifamily. So a lot of folks have already shut down their operations, but that's a clarification that just came out at the end of the day. I don't know when that was, yesterday? Time is moving so quickly. As far as King County, our assessor, John Wilson, who is a standout in an otherwise crowded room of bad politicians, has asked the governor to offer some relief to residential commercial taxpayers for property taxes in hardship situations. So we haven't seen where that's gone yet, but that request has been made by the assessor, and we'll be keeping an eye on how that would play out and how you might access that. At the city, the city's been, of course, more aggressive on all of this. They've issued a 60-day ban on eviction for residents for lack of payment and of rent or end of lease. So if a lease is ending April 1st, that person doesn't want to go, you can't remove them. And the order essentially establishes itself as a defense against any court action for eviction. And that's just typically the way these things work. If you've done one, there are various defenses that are available to residents when they're being evicted, and basically the existence of the moratorium itself is one they can point to. Again, threatening or illegal behavior is exempted from that. The mayor expanded this ban to commercial properties, and it's a 60-day ban there as well, but that came with a mandate to work out payment plans and other sorts of things for commercial tenants that cannot pay rent. So that was issued for 60 days. Councilmember Gonzalez wants to extend and expand that. So she wants to extend the ban on evictions for 6 months beyond the end of the emergency. We don't know when that's going to be. And she wants to require a payment plan regime for 12 months after the end of the emergency. And so that last one is basically a provision for no penalty, no interest loans to tenants who can't pay their rent for a period of 1 year after the emergency is over. So clearly the winter eviction ban, which is November, December, January, you're going to run into that with the 6 months. So you're looking at into the first quarter of next year before you can collect rent from a lot of these tenants. This is in process right now. We've urged them to stop, to just please stop doing what you're doing. Call the banks up, get the banks in a room. The banks are the ones to interest are in a position to issue loans to tenants that are struggling. And they're also in a position to offer forbearance for mortgages and for people in trouble with paying their obligations. And so that would be a sensible, coherent, comprehensive response to this, rather than this showboat thing that we're seeing from Councilmember Gonzalez. We're trying. The effort is underway. By the way, if you can go to our website, we have a template there that you can send an email in, and I would urge you to do that when you get an opportunity this afternoon, and I'll help you out with that address if you need it. The sheriff's not going to enforce any evictions until further notice, so that means pretty much everything. I don't know what she's going to do about hazards or threats and people that are doing illegal activity, but don't expect the sheriff to come out and enforce an eviction order. The Superior Court has shut down all eviction hearings until the end of the month. It's kind of a moot point at this juncture, unless you're evicting somebody for being a threat. That the court's not going to be hearing any of those cases. We also have a rent strike that's being organized by folks. There's about 10,000 signatures apparently and I don't know who those people are, but this is a logical outcome of the politicians fomenting of this. This is a movement that is encouraging people to not pay rent on April 1st. They're using the proclamations and the moratoriums as as kind of their rationale for urging people to do this. There are 2 letters that they're going to send to landlords. If you go to our website, you can see post about this. Keep your eye out for these kinds of letters, or for people that are organizing buildings, as they are in Los Angeles and Chicago, to not pay rent at all for an entire building. I don't know how far this is going to go. We're going to see this in a week, and we'll have better idea of what's happening. So please let us know if you see any of those letters. Speaking of letters, this morning, Councilmember Sawant, never one to miss an opportunity, has sent a letter to Governor Inslee asking for rent control. She said, I urge you to freeze rents in 2020 and suspend all rent, mortgage, and utility payments for as long as the pandemic lasts. Will Governor Inslee do that? I don't know, but it's just important to keep in mind that rent control started as an emergency in World War II, and New York still has it, and other jurisdictions still have it. This is how this happens. So what was happening before all of this? Well, kind of the same thing, except in slow motion. There are a couple of books. One's called In Defense of Housing, which is about housing as a human right. It's an entitlement. Rent is theft. People should not have to pay rent if they can't pay it. And then another one called Evicted, which is a book that has been creating tremendous turmoil in the housing, for housing providers all across the country. It takes sort of one-off eviction data and presents it as an epidemic, which it isn't. And then housing legislators react to that by imposing all sorts of interventions. And those things have been taking the shape of three different interventions. One, it's screening and lease up first in time, banning the use of credit checks, which has happened in Minneapolis and Oakland, not allowing you to check income, requiring not allowing you to check previous tenancy or criminal records. Basically, all the things you do to assess the risk of a tenancy are being taken away little by little. And then when it comes to tenancy, we have rent control, inspection regimes that are intended to, force you to make improvements. And of course, there's no money to pay for that, so you have to do that. And then of course, they're going to control your rent, what you can charge. At the end of the tenancy, if the end of the tenancy ever comes, you can't remove that person because, of course, eviction is now banned, and they're making it more and more difficult. And this is just a quote from a tax credit attorney that basically says, for market rate housing providers faced with this onslaught of legislation that limits your ability to assess risk, your only way to compensate for that is going to be to raise rents, which is absolutely the worst thing for people that have less money. When it comes to nonprofit housing, the answer is going to be more subsidy. So what happens next? Well, we're going to see rent defaults, loan defaults, foreclosures, bailouts, wage and price controls, government-owned housing. Uncle Sam's going to be your lender and maybe your housing provider. We're doing what we can to stem the tide of this, and it's something that I've been warning about since earlier this year with a column at Forbes, that what we're seeing is housing becoming kind of like a public utility that's being taken over by the government. We do what we can. I would ask you to do two things. One is, if you can, I know it's a difficult time to ask for money right now, but if everybody on this call gave $1,000, we would be in good shape to keep fighting for you throughout this entire chaos that's being unleashed by this COVID-19. You can go to our website, just go to seattleforgrowth.org/donate. You'll find a donate button there. And then the other thing I want you to do is to communicate to the council. We have a template letter there. You'll find that on our website as well. And you can send a message to the council telling them what you think. So thank you, Jerrid, and everybody for your time. And that's what I've got.
Absolutely. Thank you very much. Let me make sure I'm sharing my webcam correctly. Thank you, Roger. And wanted to say overall and highlight that if you're a housing provider, housing developer, Seattle for Growth is fighting for these rights so that you can continue operating and continuing adding housing to the supply. So with that said, please do visit their website, and Roger's information is readily available. We'll send a follow-up that has the webinar as well as the link to the website for you to advocate yourself, as well as make a donation if you're interested. With that said, we have 23 minutes left for some Q&A. So I'd like to turn towards Ian, more specifically as it relates to development. What are you advising your development clients that are being impacted, first on the entitlement phase of their projects, and secondly, if they've already broken ground?
Yes, good question, Jerrid. So on the entitlement, and that's where I spend most of my time, is working with developers, help get through the discretionary processes. The cities, particularly the city of Seattle and city of Bellevue and city of Redmond, have all followed the governor's order and are having planning staff work from home. So we have anecdotally seen that as you are working with your architects and your teams working through zoning review, we're seeing still, at least now on week 2 of work from home, responsiveness for planners on working through those things. However, discretionary entitlements require public meetings, and both Seattle, Bellevue, and Redmond, along with practically all of the Puget Sound jurisdictions, when you have things like design review or landmark review, they have canceled those meetings. And in the city of Seattle, we understand that the mayor is going to be transmitting legislation, possibly as soon as tomorrow, that will help the design review process in the city of Seattle move from something that requires public meetings, which are now not feasible, meaning those projects are being paused as they can't get their early design guidance or recommendation meetings, and move this to what's called administrative design review, which would alleviate the need for public meetings, and also will hopefully address, based on some governors and attorney general guidance about the Open Public Meetings Act, how to deal with things like the Landmark Preservation Board, which is a necessary entitlement step if you have a landmark structure or a structure that might be over 25 years old in the city of Seattle. So I would say stay tuned, but I will want to give credit where credit is due to the mayor's office, and particularly Nathan Torgelson at SDCI has been very responsive to try to understand how to keep continued discretionary entitlements working. So that's the discretionary side. The other thing that I do want to give credit to the city of Seattle for being a leader as is on the building side, right? So set aside your MUP and your ADR if you're in the city of Bellevue. The building code, as you all are aware, if you're in construction, the state building code is scheduled to go into effect on July 1. The city of Seattle, which because it's a first-class charter city can unilaterally change its building code implementation date, has already led and moved the implementation of the building code to November 1st, 2020, meaning that if you submit your structural building permits in advance of that, you are vested as a legal doctrine to the prior code, which has significant effects, as the developers on the call, I'm sure, understand. So that's a great move by the city of Seattle. I think they published that late last week after some conversations that we had with the mayor's office and with Nathan. The state, Seattle can do that Seattle can do that itself. The rest of the cities in the state have to follow the state building code, council, and state regulations. There have been a number of requests for the state to change the building code to at least follow what Seattle is doing. The governor has taken that under advisement. We've gotten good reactions from him and his staff so far. And the State Building Code Council has its next meeting scheduled for April 10th. At that meeting right now, one of the action items on the agenda is, quote, a consideration of extending the state building code beyond the current July 1 date. So we hope that may follow at the state action, which would then mean that cities like Bellevue and Kirkland and Tukwila, Shoreline, and others would be able to follow and extend their building permit for projects that are in process. I do want to say, Jerrid, if I may, just to Roger's point, the last thing is, so we've got entitlements, building permits that you're working through the process investing, and then the last piece is the governor's order and the executive order at the stay at home, which, you know, we've been fielding calls for the last 72 hours straight about what does that mean. I would encourage all of the developer members or folks that have construction projects under construction right now. We've been on the phone with SDCI this morning and the city of Bellevue to read that guidance, particularly the 14-page essential critical workers list, because the governor's order says that if you are doing construction in support of the construction, maintenance, and inspections of an essential facility, which includes facilities such as communications and information technology facilities, financial services facilities, there may be the ability to continue work subject to your GC and being able to proceed consistent with Department of Labor and Department of Health guidelines. This morning, we were on the phone with SDCI. SDCI is indicating that they are reading that order to mean they will only do inspections of projects that are in process if your general contractor can identify specifically in writing what is the exception that you are proceeding under and proceed with all those COVID protection measures. So I think that the devil is in the details, but while it is very clear that the governor would not like, or would like most construction projects to stop consistent with the stay-at-home order, there are some limited opportunities for certain projects to proceed if you do the review of the fine print and see if it qualifies as one of those essential businesses, including the one category we're still working through is, while it does identify local public finance housing, low-income housing, that language is a little broader where it says if it's housing that serves a public purpose for governmental function. And so there is arguably an argument, and obviously this is untested, that developers that have participated in the MHA program or are signed a contract to do MFTE, I would take the position that you may be serving a government function. And so that may be a little bit broader, but that's admittedly untested because we're moving fast with this governor's guidance.
Thank you, Ian. I really appreciate it. So jumping way forward to the front lines, you know, from entitlements clear to what's going on day to day at the property level, Mike, wanted to ask you, this is actually way back in history now. How has the first in time legislation that Roger discussed affected your ability to screen and qualify tenants? Specifically, has bad debt or evictions increased since this passed?
Yes, we've got instances where specifically related to sources of income, where we would generally or previously not have considered third-party vouchers and substandard income sources that are not just traditional income as a qualification, and now we're required to. We have seen those tenants, some of those tenants immediately fail within a month or 2 months, and then build up a significant balance prior to us being able to remove them through the court system or the eviction process. On top of that, the damage caused associated with those, the physical damage, not just the income loss is tenfold of normal move outs. If we're averaging $500 on a turnover expense per move out, on a standard move out, an eviction is averaging about $5,000. So the costs are significant. We do, with our hands tied in preventing that, it's definitely a challenge and a cost and risk to our clients.
Thank you, Mike. Along those lines, Roger, this is some very impactful legislation that was passed. Based on your understanding of current proposed legislation, what do you think is the least housing provider friendly, as in what poses the most risk to the day-to-day operations of an apartment building?
I mean, I think the whole principle behind a business that is based on rental of anything is risk assessment, right? I mean, your ability to be able to assess, you're giving your private property over to someone that you don't know. So you need to gather as much information as possible about that person financially and anything else that you can get in order to assess what that risk is and then adjust your price accordingly. I wish there was one piece of legislation that was being put forward and had a source point, but unfortunately the biggest part of this threat is that it's incremental. So first in time, credit checks, things like a criminal background, income ratios. So, 3 times what you need to earn at least 3 times what the rent is. As these kind of things get knocked out from under you, they're happening little by little, one by one. So the challenge is that as they cinch that down, you're going to have to find different ways to assess that risk, and then you can't respond with a deposit because many jurisdictions are banning the use of deposits as well and making you use something called tenant or deposit insurance, which is a insurance product. So that to me is the biggest danger, because what they're doing is they're building a trap, so you can't assess risk on the front end. And then once that tenancy is started, they're slamming the door shut on eviction on the other side. So you're in a position where you can't really determine who's coming in, and then once they're there, you can't get them out. I think it's in service of eventually taking over private housing for public use. And this is a really difficult area of law, as Ian will tell you. Takings law is a big challenge politically and otherwise. And if they came forward with a big proposal like this, I think it'd be easier to challenge, but they're killing us with 1,000 cuts.
Yeah, I completely understand. So not a lot of great news out there. I did discuss yesterday with Ian some recent win for multifamily tax exemption. Can you elaborate a little bit for participants?
Yeah, and certainly, and I'm sure as you're all aware of the multifamily property tax exemption, which is a state law that allows cities and certain counties to adopt a property tax exemption for, depends on what they do adopt, but either an 8 or 12-year extension of your property taxes for the residential improvements, so long as you provide a certain percentage of your housing. It's usually 20 or 25% of the units in that project at certain AMI levels, area median income. And obviously, this has been, in my opinion, one of the most successful public-private partnerships at creating affordable housing, because it recognizes fundamentally a value for value exchange of that the relief from property taxes for the residential improvements over the term of the exemption is accretive to many of your projects, even if you are choosing to provide a certain percentage of units at a reduced AMI. Now, obviously, the devil is always in the detail, where, I know that many of you on this may be participating in the program in the city of Seattle, and the city of Seattle sort of unilaterally amended how it was doing rent increases inconsistent with the HUD guidance. So, there are challenges, and I think it speaks to Roger's point that we have to watch the incrementalism. But what happened at the legislature is this last version of the program that the legislature authorized sets for 12-year extension. And it was passed where we are now starting in 2021 and 2022, that the early adopters of that program were going to roll off, so that there was a cliff of about 2,000 units that are currently in the program that are successful that we're going to roll off. And it's been a long time goal to ask the legislature to extend that program so that current projects can choose to stay in it and not lose that exemption if they continue to provide the protected MFT protected unit. What happened this session is there was a coalition of stakeholders that liked this idea. However, just like Roger has mentioned, there is a very vocal tenants' rights and tenants' advocacy coalition in Olympia, and they started to raise questions about whether there was a true value for value exchange. And so there started a sort of a counter movement that said, okay, instead of a clean 12-year extension, we will only allow this program to be extended if you do additional tenant benefits on top of the AMI. And those were things like additional voluntary tenant relocation assistance on top of what cities like Seattle already require, and other measures about softening the return to market rent. The short story is, because it was a short session and based on the advocacy of many of the folks that I'm sure are on this call, the legislature chose to do what is they're calling a sort of 2-year extension to prevent the fall off of those 2,000 units. And they've set up a task force that includes NAIOP, which will look at trying to create a balanced approach for a longer term extension. So what our goal, at least on behalf of NAIOP, which will have a member from a city that's used the program in a city over 100,000 and in a city in less than 50,000, is to ensure that the program stays as is, because we think the value for value exchange is finally balanced already. And so I would say stay tuned, but if you're looking at an MFT program that's about to drop off, you've got a 2-year reprieve, and then our hope is that we are able to work with the legislature and with stakeholders to make sure that the program continues in the successful form that it does going forward for projects that are already in it.
Great, thank you for sharing that. Along the MFT lines, Mike, you and I were discussing yesterday the city's response. They haven't updated the 2020 MFTE guidelines, which used to be based on HUD, and we're now well into 2020. What is the city saying about rents for this year?
We reached out to program administrators requesting an update. When should we expect those? The past few years it has been right about this time, and in a typical Seattle fashion, the response was, quote, "At this time, there is not a single person in the Office of Housing that is looking at 2020 increases. Until we were able to release something, I would proceed with 2019 levels." In a sidebar conversation, it didn't seem like they had any plans going forward to address that.
That's unfortunate. Thank you for sharing that. Question from the audience for Mike is, data on failure to pay rent and damage caused by renters who can otherwise qualify if screening allowed being gathered on a market-wide basis?
Inside my portfolio, yes. I can't speak to the market, but we collect data specifically related to changes just to make. There's exceptions for business cases on certain properties where we can demonstrate damage at multiple scenarios, where we could then essentially be able to limit a person's ability to get in and not be punished for that.
Okay. Changing gears a little bit to you, Roger, on the legislation side, a lot of clients of ours and even tenants of theirs are asking for, where's the assistance coming from amongst your lobbyist friends? What are you hearing from the industry about the lifelines for some affected populations like landlords, tenants, and tenants' employees?
In terms of the COVID-19 thing?
Yeah, with assistance, is there any rumblings yet, or is it still too soon?
I have not seen anything in terms of cash assistance. As I mentioned, there's the forbearance from Fannie and Freddie Mae-backed projects, so that's something. As it stands now, there is some movement, like in California, to not pay mortgages, but that's mainly for single family. So what we're asking, at least at the city level, is, what's needed is kind of if they're going to talk about holding off on the rents, they also need to talk about holding off on paying the lenders. the only other way that people are going to be able to survive is lay people off or hold back on dividend payments or find other efficiencies or economies in operations. You know, it's I don't see anything on the horizon at this point that has articulated to the people in charge that you got to do something on the housing provider side.
Mhm.
So that's still pending and up in the air, but we're pushing for what we can.
Okay. I've got, looks like almost just under 5 minutes left before it's probably going to cut us off. So question for Ian and one for Mike. So Ian, you had mentioned that the rent control is definitely a war, and we've recently had a small victory in one of the battle. What do you foresee as the next battle for Washington?
So the legislature goes into what they call a long session, which is where they try to get more of their substantive work done starting in January of 2021. This is last year we saw the coalition from tenants' rights advocates and many in the Seattle community, amongst others, pushing for what they were calling sort of an anti-gouging. They're calling it rent control version 2.0 and calling it an anti-gouging measure to try to distinguish the long academic and practical history of why rent control doesn't work. But as you are all very well aware, Oregon passed a statewide rent control measure last year with a preemption cap, meaning that local jurisdictions couldn't go higher than what the state cap is. And California did the same, even though California had many jurisdictions that already had it. So what I am most concerned about is prior to COVID, we were the only democratically controlled state on the West Coast that did not have rent control. And as you guys are all well aware, good ideas and bad ideas travel up and down the I-5 corridor. And so there was a coalition, and it was led by many of the folks that I'm sure on this call, NAIOP, Seattle Up for Growth, and Multifamily Housing Association taking a significant lead of putting together what they call the Partnership for Affordable Housing, which is a umbrella organization, not just of the stakeholders in the real estate industry, but building a broader tent with friends and allies in labor and others to share messaging with the legislature that rent control, whatever you call it, is a bad idea. And that message in the short session prevailed. But what we heard from legislatures was pre-COVID, well, we want to see what's happening in Oregon. So I fully expect that going into the long session next year, there will be more data about what Oregon is doing for better or worse. And there's going to be a renewed emphasis from many stakeholders to take this conversation about COVID and tenant relief and turn it into a rent control package. So I think that, to Roger's point, the rent control threat has not gone away. If only the urgency has intensified, and it'll be, I think, front and center next session starting in January, if not earlier, as there's some rumor that the governor might call a special session to address COVID issues.
Okay, thank you very much. With our last question, Mike, I'm sure you're getting it often from your clients. April 1st is the date on the calendar everyone has circled for seeing the impacts directly to housing providers as it relates to their residents. Any tips for these owners? I also had another owner ask about what kind of traffic you're seeing on leasing. So just kind of an all-encompassing 2-minute highlight for us.
Well, first with traffic, it's hit or miss. We're seeing that it's declined significantly in the second half of the month, but we're still getting contacts from folks looking to move because of impending job changes, things like that. It feels like the necessary moves, the things that were in progress, are all still crawling forward, and elective type moves. I want a different neighborhood. I want a larger apartment, smaller apartment. Things of that nature seem to be on hold. So in our group in Seattle and surrounding areas, we've seen it decline by about 60, 70% in some cases, but holding somewhere around there. Second part of that was April 1st, rent collections. What's our plan? How are we going to do things? We have modified operations to comply with state and local moratoriums. We've taken all the language for pay or vacate and complied with that, and change those notices for late or no pays to basically, you know, please pay your rent, here's your balance, this is what we can do to help you, etc. My recommendation to anybody working on that problem is to communicate often. We're reaching out to people as many times as we see fit and their circumstance requires. We're providing all resources that we have available to us and to them on a state and local, federal level, making sure they're aware of the details of the eviction moratorium, that this does not forgive balances. You know, we're willing to be reasonable, we're willing to be compassionate, we're willing to do everything we can to work with them, but this money is due, they do have a contract, and eventually it needs to be paid. So the final is accepting partial payments. A lot of folks are, us included, are not in the practice of taking partial rent payments, especially if it's a significantly reduced amount. During this time, especially in Seattle, where we have a 60-day moratorium, we're taking most anything worth processing. If somebody's got a couple $100 or whatever gesture they can make and pay towards their balance, we will take that at this time. I guess the other end of the scale would be folks that are dealing with people that may have previously been in an eviction state or severely delinquent at some level of the process that has now been put on hold. For example, if somebody's 2 or 3 months behind and they had a court date that's now been delayed till the end of May or June, those need to be obviously evaluated on a case-by-case basis, but in most instances, it's worth considering making some sort of offer, negotiating with that person to see if a mutual lease termination is possible, cutting your losses, reducing some of the debt they owe in an effort to just stop it and move forward, get your unit back and get it leased to a performing tenant.
Great. Well, thank you everyone that's attended, panelists and attendees, all inclusive. Everyone stay safe out there, stay optimistic. If you have any questions, follow up. We'll send an email with the recorded webinar, the slide deck, as well as how to get in touch with any of these panelists if you have interest. Thank you, everyone.